On 15 November, Warren Buffett disclosed that he has purchased a 4.1 billion stake in the world's largest semiconductor chipmaker, TSMC. With that, the shares rallied by more than 10% for that day. At the time of the recording, the stock has already surged by more than 25% from US $60 to US $80. Now the question remains, is TSMC still worth buying after the sharp rise? In this video, we're going to analyze why TSMC is such a fan favorite now that Warren Buffett is involved. But before we begin, I would appreciate if you can help to tap the like button and subscribe to my channel, as I'll be coming out with more of such videos. In return, I will share with you a financial meme. So with that, let's dive in. Okay, first off, let's take a quick look at TSMC. Alright, headquartered in Taiwan, TSMC is the world's largest dedicated semiconductor foundry and produces a wide range of semiconductor chips that serve different industries. So the chips are used in many different products such as mobile devices, high performance computing, automotive electronics, and IoT. At the time of the video, TSMC has a market cap of over $400 billion, and TSMC commands over 50% of the semiconductor foundry market share as of second quarter 2022. It is also a major supplier of semiconductor chips to Apple and all those big tech companies. Next up, TSMC has attracted the attention of Warren Buffett, right? But given the size of the investment, it is likely that Warren Buffett he himself made the investment, or at least gave his approval. This has actually come as quite a surprise for many investors, as it marks a rare significant foray into the tech space by billionaire Warren Buffett. So right out of the gate, TSMC is already one of the top 10 positions in Berkshire Hathaway's portfolio. If you compare the other big stakes in the portfolio as of the third quarter 2022, you can see very familiar names like Apple, Chevron, Coca-Cola, and even Activision Blizzard, which is famous for making WoW and Warcraft. Alright. However, they are quite different from TSMC because these companies are more or less consumer facing, that means they sell to consumers, whereas TSMC is more of a B2B manufacturer. So they supply all these top grade semiconductor chips to companies like Apple, AMD, Nvidia, and more. Okay, so although we cannot pry open Buffett's mind and ask him why he is buying into TSMC, we can sort of guesstimate that it is probably because of the moat. Not so much of the technological lead, because competitors can catch up anytime. At Samsung, they can just pump money into the technology and then catch up anytime. But the fact that TSMC commands over 50% market share of the foundry sector. The foundry's business also requires very huge capex, and TSMC's laser focus throughout the past decades has enabled it to build strong relationships with the partners and also the engineering know-how associated with the leading edge technology. This is the part where even if China take over their factory, they don't have the people capable enough to run the manufacturing process. And let's take a look at their financials. Alright, if you haven't looked at TSMC financial numbers, I can tell you that it's simply mind-blowing. Alright, TSMC has been performing exceptionally well over the past years. If you look at the picture over here, you can see how the revenue and the earnings accelerated right after 2020. After the post-COVID, whereby there's a massive shift towards digitalization and enabled TSMC to grow at more than 20 to 30% because of this massive shift. And next, alright, their net margins also increased from 30% to 42.5% as of September 2022. On top of that, okay, TSMC boasts an impressive ROE of 36.6% and ROC, return on capital, of 19.3% versus 5% and 3.2% of the sector's median respectively. So if you were to talk about the financial position, TSMC has a very strong balance sheet with a healthy cash balance of 23.5 billion and a debt to equity ratio of around 0.64 times. With this kind of strong track record of growth and profitability, it is easy to see why Warren Buffett invested in TSMC. Now let's talk about the management team. So TSMC is founded by Dr. Morris Chang, all right, also known as the father of semiconductors. An interesting fact about him is that back in his days where he's still an employee under Texas Instruments, he observed that chip designers often wanted to start their own companies but can't do so due to the incredibly high capex associated with building chip manufacturing capabilities. So you have to buy all these very expensive machines to build the chips, and you can only get back what you earn from producing in bulk. So it is very capex intensive. But because of that, right, nobody want to do that. And hence, Dr. Morris Chang, his vision is to become a pure play chip manufacturer. In the same way that Shopify has enabled independent players to sell online through their platform, TSMC enabled all these independent chip designers. That means they only provide the chip design service, all right? They enable them to start their own companies. And under his charge, okay, he pioneered the research and development from 3 micrometers to 7 nanometers and beyond. So if you were to go and Google, you can see how small is a nanometer. It's even tinier and finer than our single strand of hair. Alright, so with manufacturing capabilities second to none, TSMC became a company with massive strategic importance. And currently, okay, TSMC is being run by the chairman, Mark Liu, and Dr. Wei, who is the CEO, and they are both PhD holders in electrical engineering and also have decades of experience under their belts. Besides this, all right, they also have minor stakes in the company, but it is pretty significant. If you say that, okay, oh, maybe there's only 0.0% in their the ownership stake, but it is pretty significant considering that their ownership interests are almost 8 to 10 times of their annual compensation package. Okay, moving on. Other than Warren Buffett, okay, Berkshire Hathaway taking a big stake in TSMC, what's worth noting is how the Taiwan government, all right, their National Development Fund, and GIC also owns a 6.3% and 2.5% stake in TSMC. Okay, now let's talk about the growth and risk involved. So next, we also heard of TSMC Tech Prowess and how it is investing a whopping 12 billion to build a wafer fab in Arizona, US, where production is already scheduled to begin in 2024. So while we are seeing a lot of pent-up demand growth, right? How TSMC is diversifying their plant to even the US, we need to be mindful of the downside risks as well. So there are a few risks involved. The first one is of course the client concentration risk, with the largest customer contributing 26% of revenue in the year 2021, and the top 4 clients contribute almost 50% of their total revenue. Secondly, okay, TSMC operates in the highly cyclical semiconductor industry and derive 40% of the revenue from the smartphone market. Okay, and because the industry alternate between shortages and oversupply, but foundries cannot always raise prices during shortages, but yet they have to deal with all the high fixed costs in all the downturns. So this is one risk that whereby the semicon industry has to be aware of. Third, of course, the most important and everyone is looking at it is the political risk, right? If you were to look at it, okay, managing political risk has become integral to TSMC. It is skeptical to pressure from China as well as the US because they derive most of the revenue and operate factories in both countries. So it is always something to bear in mind. Okay, last but not least, let's look at the valuation. Despite rebounding almost 33% after Warren Buffett disclosed his huge interest in the company, TSMC is still trading at a reasonable 13 times PE ratio. As compared to chip designer companies, bear in mind TSMC is a contract chip maker, different from chip designer companies like Nvidia, Texas Instrument, and AMD, who has almost maybe more than 2 times or even 4 times of TSMC PE ratio. And if we were to look at the PEG ratio or PE ratio divided by their forward growth, TSMC also fared pretty decent here at 0.6 times, on par with Qualcomm 0.5 times and AMD 0.7 times. Okay, so to sum up everything, TSMC is a leading contract chip manufacturer that is well positioned to benefit from growing demand for technological products, especially the high growth areas like 5G applications and high performing computing devices like data centers. Okay, in addition, TSMC has very strong financials and a very decent track record of growth and profitability. Most important of all, it is diversifying its manufacturing capabilities to the US, and this is probably what ticks all the boxes for Warren Buffett. We hope that you have enjoyed this video. If you want more tips and advice on how to invest for the better, be sure to subscribe to my channel and hit the like button. Alright, so next time you can also watch this video if you want to find out about other US stocks. I'll see you next time.